So just before we jump in, what is Yola? It's a free website building tool. Our business model, we're targeting small business groups, individuals, hobbyists, organizations. The philosophy of the business is that if we provide hosting free, we provide like subdomains for free, and we provide storage for free. We decided to also offer the software for free because in the same vein, when you go online, log into Yola and use our basic software product, it doesn't cost us anything. It's really, really cheap, so we made that free too. So we make money from selling domain names. We're launching a template marketplace in the next 6 to 8 weeks. That's just basically premium templates that look better designed, and we pay for those, but we still have a gallery of like 100 and something free ones. We're launching domain-based email. We're launching some e-commerce tools, which we already have some of them in the PayPal right now. We're launching a marketplace where designers can upload templates and sell to our user base. And there's a huge opportunity here because we're actually close on 2 million users. So if you can produce templates and upload them through us, it's sort of like Apple iTunes App Store, but for templates. There are enough people out there looking for a specific type of template. So if you're an attorney and you're looking for a legal type looking website, we'll find one in the category section for legal, and one of you guys designed it, you'd make the money off it, we take a cut, and our users will be happy with new design sites. It's a good model. It only works when you have critical mass of users. Because if we had 100,000 users, no one would design templates for us because we wouldn't sell them. So our growth path is actually trying to get us into 20, 30, 40, 50 million users next year to create the biggest marketplace where it makes economic sense for designers to design on our platform and not something like one of the other platforms out there where they've only got 1 million users or 100,000 users. There's more chance of doing templates. So liquidity is important. We're also white labeling the platform, so we're partnering with ISPs, PC manufacturers. The idea is that Acer as an example over here, we would do a deal with Acer, we would put our software links on the browser in the start menu programs section, even on the desktop, and it would be distributed with their 10 million PCs a year. And when people buy off our marketplace or they sign up for an account and they spend money with us, we cut Acer in on the revenue. So really getting wide distribution, especially for products that go to small businesses. And then we're looking at an ad network at some point as well, but we're not that hard on ads right now. Just last slide about our business model and how we're disrupting the market. We looked at the hosting market and the site builder market. It's a multi-billion-dollar market, according to the International Data Corporation. So we did the research 3 or 4 years ago. It was just ripe for disruption because these guys built their business model on hosting and bandwidth. And as I said earlier on, it's just not a good base because that's falling to pieces price-wise. So we decided to launch a very, very fast site builder, make it easy to use, drag and drop interface. We pre-configure domain names. So in the past, you'd have to configure domain name, configure the server for front page extensions, whatever the case is. It's very technical for most people to do, but with us, it's just put your credit card in, buy the domain, fully configured, hit publish, live and web. So making it really, really easy to use. And I've spoken to some of these points already. So. And the one thing we noticed is consumers are becoming smarter. I mean, they'll pay for value, but they won't just pay hosting or bandwidth more because they know that it's becoming cheaper. So for us, it was just about getting out a valuable product that people will pay, the things that people will pay for, will offer that. So domains, we don't sell domains, it's not cheap. It's $19.95 a year. GoDaddy sells them for $10 or $11 a year, so it's we nearly double the price. In fact, our margins are something like 6 times their margins. But people are willing to pay us because it's convenient. They don't have to go to GoDaddy, go through that whole checkout process, it's quite long, and then go into the MX records and the DNS records and change all that stuff. And most people don't know what they're doing anyway. So they're happy to pay us the extra margin for the convenience. And the research we did some research, basically if it's less than the cost of an hour of someone's time, for the convenience they'll pay. So if it's less than $10, average wage in America, minimum wage like $7.50. People willing to pay that just to avoid so it's a good margin for us. And it's a good annuity income stream because every year we just have a domain renewed. Just examples of some sites. This is a construction company. Some Twilight fan built a very cool Twilight site. TV show, for those who don't know what it is. Okay, so our success in the past year, it's actually the past couple of years, and it's more of a summary. Over 1.5 million users today, to be precise. We raised an angel round of $300,000, roughly. I think it was in rands, but locally, when we spun the business off, we put about $1 million rand into it as a separate entity, and then we ran out of money, and then we raised some more, and I think another $1.5 million. And this is also getting us to the point where we had a product, because when you're launching a business from scratch, you've got nothing. So we talk to investors and just like show it to me. And it's like, well, it sort of works. You can drag and drop something on the page. It was really like bare bones. So no one believed in the vision of what we're trying to do. No one could see through. Investors have a really tough time, seeing what's not there. They really want to see what you've got done. They don't want to believe in this, vaporware stuff. I call it steamware because when you're selling it, it's so hot. But so you have to actually build products, and building product takes time and takes money. So you've got to keep yourself going. And we have businesses that don't make money from day one, but you can't just, it's not revenue positive from day one. The unfortunate thing is you just want to get into that space, you have to have capital. We closed the Series A round. Series A, for those who aren't aware, is an American terminology. We're going to hold legal structure into it. It's the first round of solid funding. It's generated over $1 million. And we raised $5 million from effectively the Richmond Group, and we restructured now into Mainnet, both this or Jason and Luxembourg. And it's good old South African investors in the day. I mean, these are some very big investors who have interest in Richmond. It's part of the whole Rainbow benefit group. 2 months ago, we raised $20 million in like the deepest, darkest economic times we've ever seen, I think. And people also went, what? And especially the people who didn't want to invest in that one. They were like, what? We missed out on this one. And the reason we did it is because the world's collapsing. People are being laid off. What do they need? They need to start businesses and get websites. It's a counter-cyclical business. So it's a lot easier making this sale than I think in the good times when people are just not too worried about having a website because they've got good, safe jobs. We also implemented our monetization strategy recently with the domain sales. So now, from something which wasn't making money 6 months ago, we're actually building solid revenues. So I'm going to talk about the different stages of funding and how to get funding for your business, depending on what stage of it you're in. The first stage is the angel round, and that's, so we did $500,000 investment in the previous company. So that was at 6:1, around 6:1. So we spent $3 million rand roughly developing this product. And we built it to the point where it was so good that it was crap. Because it had too many features, it had too much stuff in it, it wasn't user friendly, you could do everything, you could probably cook a pot of tea with it as well. I mean, it was really well wired. But the few things we wanted to do, it didn't do really well. And also it was over-engineered. So and it was also built for Internet Explorer, which at the time was a good idea, 2004, but as Firefox launched in 2005, it was better, and we had to change stack and support multiple browsers. So we spun it out, and the existing investors weren't too keen on pursuing this project any further, so we spun out to a separate company. And we launched the alpha prototype for just $100,000, so it was, I think a little bit more, but it was about $1 million rand. And we managed to get a prototype out the door in 6 months. And that's just 3 guys, 2 contractors, and myself, but I wasn't coding, so it was just 5 people. And it was just heads down, a little bit of work every day, and just getting something out the door. And after we launched the alpha, I was able to demo it for 2 guys at Google, and etc. And people, there was interest brewing. And one of the investors in the 200K round was actually with me on that trip, just coincidentally. And he was like, and he saw the guys at Google's face. He was like, oh, this actually could be something interesting. So he put some extra money in. And all that sort of raising funding, I was in fundraising mode for like all year. All it did was basically help us get to the point where the product got to a certain juncture where investors were like, okay, we can see where this will go. And at that point, we only had 10,000 users. So the strategy we used was get the product out quickly. We used agile development methodology. So every 2 weeks there'd be a release, and we just iterate, get it better. The pitch to investors is basically, the engineering guys, lock them in the room and don't tell them what you're doing, because it sounds bad, but the more involved they get, the more they have emotional highs and lows, and then they don't feel like coding. It's like, and I had a bit of that in the beginning, and afterwards, like, just told me nothing. I was like, I'm off to Geneva, I'll see you later. Where is he going? And literally going, we signed the deal in Geneva. So they only really saw the term sheet when I came back and said, look, raise $5 million, and they were going to flabbergasted because they thought they were going to lose their jobs before Christmas, which is probably going to be the case, in all honesty. Grassroots attention, just blogging, presenting. I think I actually launched the first version of Synthesize, and at the, were you at dinner, Hank, in Joburg? You were there. It was the Geek dinner or something, the 27th dinner in June or something. So we launched our first version there, and people who were there saw the first version, and it wasn't much. It was very bare bones. All you could do is drag and drop stuff on a page, you publish. In fact, I don't think you publish, but it was cool.